secondary private equity transaction involves the sale and purchase of an investor's existing interest in a private equity fund. The buyer of a secondary would purchase all the remaining assets as well as the remaining fund commitment to meet future capital calls for new investments, for fees or for follow-on investments. Globally, the private equity secondary market, particularly in the US and Europe, is enormous, with many secondary-focused funds active in those markets. In South Africa, up until recently, it has been fairly limited and opportunistic. But since the launch of the Ashburton Private Equity Fund 1 in 2014, Ashburton Investments has been leading the way by being successful in originating and concluding a fair number of secondary transactions, which indicates a developing private equity secondaries market locally. Ashburton Investments has spotted a niche opportunity in the space, and through our secondary-focused private equity funds, we are offering something truly unique to our investors. Our private equity funds solve the needs of existing investors by providing liquidity to an illiquid asset class, and also provide an opportunity for new investors to gain access to a diversified and matured portfolio of private equity investments. We do believe that there are enough opportunities, and in fact have started raising funds already for our second private equity fund that will be secondaries focused, and we did so in the beginning of this year in 2018. Sales of these secondaries are often driven by the needs of the investor rather than the quality of the manager or the quality of the underlying portfolio companies. A secondary sale might happen, for example, due to a change in circumstances of an investor. An investor might have an immediate need to pursue an attractive opportunity and hence the need for liquidity. An investor might have a need to rebalance portfolios. Sometimes organizations go through change, and with that comes change in people, and different people have different views. Investors might also have a lack of patience, and this is an asset class that requires patience and time. These are all typical examples of things that might unlock a secondary transaction. Secondaries are attractive for a number of reasons, but to just highlight a few. Firstly, asset diversification. A secondary-focused fund can provide exposure to as much as 30 underlying portfolio companies, obviously depending on the size of the fund and its concentration limits. Secondly, investors are able to gain more immediate exposure to private equity because the secondary portfolio is mostly or fully invested. Thirdly, secondaries are globally proven to deliver very attractive risk-adjusted returns. And lastly, by investing past the J-curve that is typically associated with primary private equity investments, secondaries are able to unlock the value of a more matured pool that are closer to its exit horizon, and thereby avoiding or smoothing this J-curve effect.